Okay, and we're back. Are you guys seeing the stream?
I got started back.
Nice. Okay, gonna record this for the rest of the Solari boys who were not able to be on Friday's stream. We're gonna end off, obviously good Friday trades, but we're gonna end off with, I guess, a little bit of lag from TradingView there. Holy. But we're gonna end off with just reviewing the last session from Thursday. So we had a SW1A accumulation go over into an SW1RD right there. Remember using that point, and then it was a true UTAD model. Completed right there. Market maker continuation model. If we're looking at, guys, I'm getting the most extreme lag that I've ever had on TradingView right now. We'll just have to bear with it. Could not use the magnet. So whatever. I drew the market structure wrong there. We're SFPing that high, right? SFPing that high on the way down, take that low, finish off the SFP that we were getting here from these highs, and then break structure back to bullish. So this high is now a weak high. That's our first initial target. When we are looking at, and I'm going to get rid of some tabs on my other screen because the lag is actually just insane right now. But if we look at our daily time frame, so we always want to start on the daily. We have this high right here from Wednesday of last week. So that's that previous week high. So we have previous week high. Right there. We have liquidity absolutely resting above. We have this high, this high, this high. So we could say relative equal highs right here. Lag's getting a little better. Relative equal highs right there. Liquidity. So we got previous week high, relative equal highs coming in. What is our daily? Our daily's kind of in a range. So not really too much to be gathered about this from the daily candles, besides just looking at the weekly range, previous week high, whatnot. So we kind of have those on the chart as draws. If we're looking at our sessions now, like what did each session do? So London expanded yesterday. New York kind of reversed that a little bit. Well, not the full thing. And then Asia consolidated, London consolidated, obviously giving two Wyckoff trades. So when you're in those range-bound environments, that's where those really nice Wyckoff trades happen, as you can see right there. And now we have New York opening right here. So two consolidations by the other two sessions. And now let's look at New York. We want POIs on both sides. So you can see this 1 minute gap right here, and we're going to check other time frames because it's actually been tapped already. Let me check the higher time frames. Let's see what we have. Okay, so we have this 5 minute gap right here. Just going to make it a regular fair value gap. That's one POI that we can have. We can check our fibs. That fair value gap is right on the 0.5 of our fibs. So that's our best bullish POI. So we did talk about the market structure. It was getting crazy lag at the time. But so that market structure broke back to bullish right here. This high remains untapped. What session was that? So that was actually an after hours session high. So that can be like a first, I'm not even like just a first draw. Getting crazy lag. I don't even know what this video will look like, but crazy lag. So this is now a weak high based on market structure. Right there. Now let's take a look for some Judas swings, and we're going to get a little bit interesting with it. So let's see. Let's see. If we're looking at the lower time frame, structure demand right here. I think I saw some order blocks as well. Yeah, just kind of like lower order blocks right here. And a 1 minute order block right here. So that's all well and good. You had a 1 minute gap here on this pretty bullish candle right here, but it's been tapped into. Hasn't taken the CE of it though, the EQ of it, I don't believe. So we could have it on. Yeah, hasn't taken the EQ of it, so we can definitely have that on. So these are kind of the POIs. These are the bullish POIs right here for any Judas swings on the open. Judas swing makes sense market structure wise, so definitely can be taken. If we now go to the 30-second and we believe in this, let's see what happens. Okay, so now we hit the CE of this 1 minute gap, and we also tapped into the first layer of our structure demand right there. There's no fair value gaps right now created though. Looking at our sessions, I can't look at the sessions here. Looking at our sessions, is this a London high? No, it's not. So this is New York, pre New York high, but two equal highs basically there, and then this manipulative move down. So there was no fair value gaps even on the 30-second. So the highest time frame is a 15-second gap right here. Highest time frame is the 15-second. We've tapped the CE of that 1 minute gap and also 15-second structure demand. And that next candle does invert it. So with our inversion for value gap rules, you can look at anywhere from current price to, the fair value gap, wherever you want to go. I would front run this pretty heavily, probably at this breaker right there, stop loss below that low, and target any draw on liquidity above. So what are our draws on liquidity? Well, you could definitely target this high. It's the next high, but we also built context with that previous week high, and then we have relative equal highs right above that. So take your take profits as you see fit. But there's probably a super valid trade, and you can see we did tap into the 0.5 on that first fair value gap. This first fair value gap, that untapped 5 minute, is super powerful because the candle bodies are respecting it. Like the wicks can go outside the lines, but the candle bodies do want to be respected. So if we go down to our entering time frame, our execution time frame, that highest time frame for value gap, there was nothing else up here. You could say this for value gap, but it's wick through, not using it. And then what does that next candle do? Not filled. Maybe you would have gotten filled there, but it actually does come all the way back, right, for that 15-second. I kind of said this right here is valid. So you would have got filled in that trade. I think this is could be a tighter stop loss. Could be a tighter stop loss for sure. And you could also see that, maybe add another contract on that reaction too. And then just looking at the 15-second, that's like your classic Judas swing right there. Pretty nice, like really, really nice SJS. So I'll come back and I'll screen grab this and share it. But that's basically exactly what you want to see the SJS doing. Not to mention you getting that liquidity sweep as well. So if we want to stack basically what happened here, that last candle's wick did deliver a liquidity sweep. So everything basically hit. CE of that 1 minute, the 5 minute, everything's getting respected. 0.5 fib. Where's our fib? It's too far away. 0.5 fib was right on this. So super nice. SJS on the open. That thing is blasting up. If our draw on liquidity was right of that new week, so a little bit of drawdown, and then you would be drawn right to those relative equal highs. and I would have taken full take profit there if I was in this. So we could still go a lot higher, right? You can see the fibs there. So we end up going a lot higher. Obviously, if you would have taken profits there, you would have missed out on all of this. So you could do a trailing strategy where maybe you did, like, obviously be taking profits. Be taking profits at your draws, and then just be, just be trailing pretty aggressively. If you would have seen this candle and then like trailed to the 0.5 of it or whatever, see the next candle, trail to that candle, trail even to here, you would have still been able to capture this whole move. And then if I was seeing this, I probably would take profits there because, that would be really good for a full take profit right there. But in any case, super valid to take full TP at those relative equal highs. And then we can see what type of day we're having. So we know if we look at our sessions here that this is the New York session and we have expanded extremely aggressively. When we do that, we're going to expand away from the New York VWAP pretty aggressively here. So if we zoom out, I'm going to clean this chart up a little bit. This line is a bit too, but you can see how we were drawn to previous week high, and because price is searching for liquidity, and these highs were an absolute magnet. So it's like this high, this high, this high, like just really good draws right there. So you also got to see a pretty exotic version of the SJS right there, where your 15 second is the highest time frame. So don't worry about the time frame, worry about the highest time frame. In that case, but also when you're taking SJS, you don't even use the highest time frame. So like that was a very, very interesting case where the highest time frame was the 15 seconds. So there's not really a more valid time to take a 15 second. So if we do come down now, and you can see the shape of it, really, really like look at the shape of that SJS. Like that is what you want to see. And so this expanded so aggressively that we can barely probably even see down there. And we can see that aggressive expansion away from the New York VWAP. So when we do get days like this, these are the days to be looking for VRMs, the VWAP retest model within SWT. So we eventually do look at how much higher we go to. We go another leg higher. So yeah, that's just like a good example to watch out if you are able to capture a super aggressive move on the open and you recognize that it's a very, very aggressive trend day. Try to stay in at least with something because like those are the days where you maybe can, just print decently hard on, to be honest. So we end up kind of messing around at this high. And then we do end up breaking down. So when we do break down, now we can be looking for the VRM. What we do want to have with the VRM is really good POIs though as well. So we have a 5-minute gap right here. 5-minute fair value gap right here. That's our first POI. It's not exactly on the VWAP, but we can use the VWAP in interesting ways. We're still playing it. But you'll see what happens here when your POI is actually not right on the VWAP and how we want to play it. So what's that 10-minute looking like? It's also a 10-minute gap. You can use the 5, and then let's see if we can refine it down with any gaps here on the 2. Yeah, kind of just overlapping the 2. It's not going to change anything. So just going to roll with that 5-minute. So now you'd be out of this long and probably done for the day. But if you did miss this move, right? So just to remind you guys, the VRM, like what we want to see with the VRM is price to aggressively expand away from the New York VWAP. Something happens up here. Who knows? Maybe it's a distribution, maybe it's not. And then when you come back to the VWAP, whatever you do here, find an entry and take that back. Full TP is new daily New York high. So that's the New York VWAP strategy. And then you want the New York VWAP to be sorry, a little bit of lag. Oh man. Yeah, okay. You basically get it. We'll have to deal with the lag. It's not the best. So now we're coming back to the New York VWAP. and there we touch it for the first time. You guys actually want to see a gem. I'll include this in the video. I'm not saying that this is built into the strategy, but if you guys do want to see a gem here, if you want to build some context for a short off this day, breaker structure. Oh, this lag is really getting me. I'll have to battle through it. Breaker structure right here, back to bearish. So some sort of bearishness, right? Definitely not thinking that we're going to do anything with it. You have equal lows right here, right there. So that would be a target, and also an unfilled 5 minute and 10 minutes. So that can be your draw on liquidity, is those unfilled gaps. What can we use to short though? So if we look at 8 a.m., this is that 10 a.m. open right here. This price point right here, that's that 10 a.m. open. So that's a key level. So if we're looking to play that level, what happened here? We have no Wyckoff structure. All we have is a break of structure back to bearish. What we have on that key level though is supply. So this is more of an advanced trade, I would say, but slightly front run the key level. Stop loss above that POI, maybe even once more. I don't know. Just give it a little bit of room. You want to target higher R with this, and I wouldn't risk too much with it. You want to be over like a 6 or 7. So this is 7 right there. If you're looking for the setup, you can expect VWAP to deliver a little bounce here, but we have liquidity below and our POIs are not below. So your draw on liquidity, if you take this trade, is a MSCM based on this breaker structure using the 10 a.m. key open right there. I want to make sure that it's the exact candle. Yeah, no, it always will be. So if we do look at what this trade, so this is a limit order. So you would have been filled right there, and there's your 7R. So pretty interesting. This is more of an advanced play, but it will just live within the MSCM model. There will be like obviously little tricks to all of these models. They're just bigger frameworks, and some people will have more of a liking to this than others, but you have very clear draws of relative equal lows and unfilled 10-minute and 5-minute gaps, and you're playing that key open, whatever POI is on that key open, right? And you're targeting for this key open most times a pretty high RR. So that would have been a 7R right there. Pretty nice and very key. It's like the VRM, there's no POI, so you can't play it. You can't really play it. No POI, just liquidity. So now that trade is played out, very, very interesting. Very, very interesting. You guys will have to back test that 10 a.m. key open. I'm going to be a lot to be using it because we want to be playing very interesting MSCMs like that when we can. And that'll mostly be off the 10 a.m. key open. If something like that, like a crazy one like that, you need some sort of crazy confluence to do that. But now we're deviating. We tapped into our 5-minute gap. So the very key right there, we just confirm we confirm a VRM right there. So before we even think about taking the VRM, let's look at our draws and liquidity. So we have a liquidity point right there. We have the full VRM, New York high. We can make that just a orange line. Say New York high. So that would be full TP of the VRM. Now we have to look at our VRM POIs, because what confirms the VRM is the aggressive expansion. So if you do go below the VRM, you want aggressive expansion above. You know what? This brings me to my next point. So if I go back to this 10 a.m., where was it? It was right here. And that open. So what's really important about this is you have to have the draws on liquidity, and what you do get is this aggressiveness. Wow, the lag. You get this through the POI and then retest and then go, right? So we're looking to do relatively the exact same thing. So it's cool to show that, looking to do relatively the exact same thing with this, where now you're getting acceptance back. These displacement candles confirm the VRM as you're getting acceptance back inside the New York VWAP while also mitigating your POI and sweeping liquidity. Be looking for a retest and go like this. So exact same schematic, basically inverted right there. So pretty interesting to look at that. So now that our VRM is confirmed, we're looking to play it, and probably would have the POIs already as we're looking to play it. I'll try to clean up the chart here without getting some lag. I do want to get this just a little bit cleaner. So fair value gap, beautiful. Do we have any macro? I think it's lunch, but still going to look at it. So here's 950. 950 opened right here on this candle. What did we do? We swept liquidity and mitigated our POI, while also, I'll make this just a little bit less. While also, so let's look at our macro now. Right here. Beauty. So in this macro, what did we do? As soon as it opened, we swept liquidity, mitigating our POI, and then we broke back in, confirming a model. So that's all I really need to see out of the macro. This might even be lunch, but it's just very cool to see it from a time-based perspective. It is about price, and it is also about time. So as I say that, we're getting extreme amounts of lag. Gonna battle through it though. So let's pull our POIs because this is important for the VRM. So structure demand with the inefficiency, that POI is right on the New York VWAP. That's going to be our premium POI. That's going to be the best. Is this a Wyckoff? I don't care about Wyckoff for this, but it is a little 3 drive coming in, so valid. You also had a 1 minute RB within this POI that does end up getting filled and stays intact. So not something I would be looking to take, but it is something to look at. Another POI that we have coming in, sweeping liquidity, is you get this confirming inversion for value gap. So you can see we're just stacking, confluences to take this trade. So not necessarily that we need to retest this inversion, as retests are never guaranteed. And so this is going to be very key for the VRM. Retests are never guaranteed of an inversion, though we do like to play them. But you have to take the New York VWAP because you want to tap and go of that New York VWAP. So what POI is on the New York VWAP? Well, it's the structure demand. So although we used the inversion to confirm more so the play and possibly use it for our stop loss, we are not going to use a full inversion. Probably TP1 there or full TP and then full TP there. So this would basically be the trade setup. And then what does price do? Fills you right there on that demand. Fills you right there on that demand in a confirmed VRM. And then you move your way back up. Breaking structure right here back to bullish from that low down. Lag got me there. Apologies. I'm going to remove the 10 a.m. key open, but shout out the 10 a.m. key open. We got that breaker structure back to bullish right there. This high is now weak. We can operate the rest of the session thinking that high is weak. This could still definitely be a take profit because, well, let's look at our take profits. If you just want to be out of the trade as well, any opposing POIs are fine to take profits on. So aware of that gap, maybe we'll say this is it. The break structure gets us up there, but let's say that's that. It still can be that full high though, but that's already a pretty nice RR. What else do I want to show? Yeah, so you got the inversion, and to top everything off, you did have a CISD right there. So you're having CISD, inversion, displacement above the New York VWAP, confirming mitigation of your 5-minute gap. You have a liquidity sweep, and you had that liquidity sweep taking place within a macro, and you're confirming candles inside the macro. So after that macro, you can expect expansion of whatever just happened. Whatever market makers were doing right there, you can expect the expansion. So this breaker structure is now back to bullish. You're on the right side of the market, being long. And there you would have hit full TP for your VRM coming into that supply. 1-minute order block, that would have been good enough for me. Got that liquidity sweep, and yeah, we're trading pro order flow. So pretty nice. So there's our second SWT model. So we had the SJS off the open, and then we had the VRM right here, right there. So let's see. There may be one other trade. Also, we had this MSCM right here, kind of a more exotic show though. So now what happened? We created demand right here. So we kind of look at our POIs for the rest of the session. We created demand right here. And I believe New York PM is going to open at some point here. So market structure is still bullish. You did get a small break back to bearish though. Like that, this is bound to happen though. Okay. So you're coming into that demand and you're bleeding down pretty aggressively. With this liquidity. Do we have any more refined POIs? Because we still have this draw on liquidity to finish the VRM for new daily New York high. Will that happen every time? No, but it is kind of the goal of the VRM is to make a new high. So the way we bled down was like super nice liquidity wise. I want to see if this POI has anything more. So we had a 2-minute gap below right here. We're in a 2-minute gap. We had more refined demand at the bottom right there. So entry triggers here, you would be looking for MSCM. So also in a 5-minute gap. And that's basically it. Okay, so that we'll use that 3-minute, a little bit higher up, 3-minute right there. So those are the POIs. I don't believe there's any fibs for them. Let's see. Maybe use from the VRM low. Okay. If you use from VRM low, you have that 0.5 on that fair value gap. Let's see what price gives. Tapping in, touching the CE of that fair value gap. Mitigating our most refined demand. Mitigating that most refined demand. So moving our POIs out of the way. Fibs did validate. Let's see the fibs from all the way at the low. Nothing crazy. I like pulling them from here. Can also pull them from here, I would say. If you pull it from here, this market structure leg, or I guess let's do this one. You know, coming into very extreme discount of this market structure pull right here. However you want to look at it, you're tapping into the most refined demand. Let's find the highest time frame for a value gap, or if you wanted to take that, POI, you can. You're playing a POI limit order. So I don't really see anything too crazy right now. Don't really see anything too crazy. Taking that low again. All right. And there you get your entry. I went one candle too far. So as you can see, I was struggling to find anything. Couldn't find an entry trigger. We did, again, sweep that low 3 drive into that most refined demand. Entry trigger right there. Market order. Stop loss below this low. Running that up for new daily New York high for MSCM right there. Draw on liquidity super clear. Like we bled down. What was our macro doing? Macro wasn't doing too much, honestly. Where was it? Right here. So macro is basically tapping in, so we hadn't really done anything. Not really a confluence there. And then this is how that MSCM played out, kind of completing the order flow objective of the VRM before. So a couple trades there that could have been taken. Maybe there was better RRs there, but using the actual entry trigger. So just to recap the session, we had 3 SWT models. We had the Judas swing on the open that could have definitely been held for longer. We had the VRM coming back, which is the perfect day to play that because of our aggressive expansion away from the New York view up. We also had that 10 a.m. key open that I showed. I don't have that in my bag currently, but looking to play that more and getting the reps. And then we had the MSCM to complete that order flow objective of the VRM. If you did fully take profits here, if you waited through all that, you would have hit full TP, but so close that supply probably would have been enough. So All right, guys, that's basically our recap of this was Thursday, August 13th, 2026 through the SWT lens. And I'll see you in the next one.